Yeah, Alex, I was going to ask you about your price target, which had been 95. How about the quarter itself? Is that leading you perhaps to consider raising your rating, which I think says here you're at a hold?
Yeah, hey, thanks for the question and happy holidays to you and all your listeners. I think that, look, it was a very strong quarter. It was a very strong quarter at a time when not everybody was having a strong quarter. And I think it was vintage Larry. It's the power of the apps. I think, there's easier competition out there than AWS, and it's some of the other ERP companies. And I think you saw that. This is a company, again, that they sort of invented the notion of the cloud at the same time as, famously declaring that it was not going to work for large enterprise organizations. The thing that stood out to us, again, the continued momentum of ERP in the cloud. This is an area that Oracle is, among best in class. And it's, less than a quarter of their revenue, but we think it's more than 80% or close to 80% of their incremental growth dollars. And we believe that, next year, coming out of the pandemic was a forcing function, a Y2K event, if you will, for back office transformations. And we believe that that's just going to accelerate next year as a lot of companies are, faced not just with supply chain shortages, not just with a war on talent, but just a completely different configuration of their entire organization. So,
yeah, given all that, I'm just curious, and the momentum that you just described, from your point of view, what is holding you back then, or what is giving you pause that you continue to have a hold rating on the stock?
So, look, we cover a lot of growth companies, and we believe that Oracle is now getting into a mode where they're starting to execute effectively. For us, it's time. We've covered Oracle for a number of years. There have been false starts before. So we want to be patient. We want to see, the second half is the most important for typical enterprise software companies. They're going into their third quarter. They're going into their fourth quarter. We want to see how they execute and if they can keep up the momentum. And if they can, the stock is still trading below the S&P on an earnings multiple in this year. And I think that's kind of interesting.
Alex, do we fully appreciate, or do investors fully appreciate the opportunity for a company like Oracle, or, by the way, Amazon or Microsoft or some of the others, where government contracting work is concerned right now?
I think it's a very interesting question. Look, we're in an era of meme stocks and Wall Street bets. And one thing that investors, particularly large tech investors, love is an old dog that learns new tricks. And Oracle, you can see the pathway that Microsoft laid many years ago when they really embraced and transitioned fully to the cloud. That's the kind of pattern that Oracle wants investors to think about when looking at the opportunity they have. In fact, Larry referenced how Microsoft moved their office space into the cloud and how the company now is moving its base of large application on-prem customers, and they've only moved 1,000 out of 8,500 in the next 5 to 10 years. There's an opportunity to move the rest. That's a pattern recognition that can potentially be pretty powerful. And if investors start to gain confidence in the durability of this growth and the opportunity for it to be more profitable and see more earnings power, the sky's the limit.
Yeah, so here's some wait and see, given the fact that you do have a hold rating on Oracle right now. What would you buy instead if you could choose one or two names?
Yeah, we have a mnemonic. We call it Catwoman. The C stands for Salesforce. The A is Adobe. The T has been Twilio. W, Workday. M, Microsoft. I, Intuit. And ServiceNow. It's just really this next generation breed of cloud companies where we think you can benefit from really high level management, great markets, and really powerful margins.
Alex, thank you. Appreciate your time.
Thank you, guys.